Here we come to, I guess, the a great part of our show, the part of our show that I know gets a lot of play on YouTube and social media channels. Top three things that individual investors should be focused on before you make your investment decisions. And we always have three. And today, these are announcements from the Trump administration. So yes, tariff talk, but also other talk. And I'll explain what I mean by that. There are these one-off announcements, or these are ideas on perhaps tariffing certain sectors rather than just countries. This is the talk that's been coming out of the Trump administration, out of the president himself for now, for weeks now. And this definitely can and will move markets. Bond yields, especially the 10-year government bond yield in the US, how that can influence markets in your investment decisions. We'll talk about that as well. And lastly, corporate earnings. We are just entering into corporate earnings season. We just finished the first quarter for businesses, for corporations, and U.S. has started reporting corporate earnings, their businesses' corporate earnings, starting off with the big banks. We had a couple of airlines as well report earnings. Canadian corporate earnings season doesn't start for a little bit. U.S. earnings usually start first. So these are the three things that I think individual investors should be focusing on. So let's go to our first one, announcements from the Trump administration. And interesting enough, you can see our first chart is a great chart, but you can see just from that long list how chaotic these tariffs and trying to understand these tariffs can be. And as I said, it's not just the tariffs that are being put on countries, Canada, China, Mexico, etc. There are now tariffs being spoken about pharmaceuticals, semiconductors, lumber, to go along with tariffs on energy that we've already seen. So automobiles, another big one, obviously, in Canada, although once again, not to create more uncertainty, but the president has hinted recently that maybe he'll make some exceptions for the automobile companies like Ford and GM and Stellantis while they get their house in order, so to speak. And as President Trump puts it, give them some time to bring their business back to the United States, which may or may not happen. And as we said, if it does happen, it's going to take a long time to happen. Some of the highlights here, as I go down, I know it's tough for viewers to see. March 4th, all goods imported from Canada had a 25% tariff. Energy products, 10% tariff. And then we obviously retaliated to the U.S. And then the U.S. said non-CUSMA or USMCA compliant goods, we're going to focus on those to get the 25% tariffs. And if it's USMCA compliant, the trade deal that President Trump negotiated himself, keep in mind, if it's compliant with that, then there will be no tariffs. Potash is another thing that if it's not covered under CUSMA, that could be tariffed as well. Surtax on electricity was announced, but then taken back by Premier Ford. Steel and aluminum tariffs, 25% on that. And then auto parts. Auto parts, I think, is still to come. Autos, we know 25% tariffs there. And then obviously all the baseline reciprocal tariffs between the US and the rest of the world. So it just goes on and on and on. And so, yes, unfortunately for investors, we have to keep one eye on all these things, an ear, I guess, on what comes out of the White House. Perhaps there'll be more carve-outs for things such as automobiles, such as certain businesses. We know that recently semiconductors, chips, computers, phones, that had a brief pause while the Trump administration studies these areas of the market and the economy and figures out what to do with new tariffs. So yeah, you need to have an ear to what is coming out of the administration before you make your investment decisions. Second point that we have on our list there were bond yields, the 10-year bond yield in the United States. Why is that important? Well, we saw the 10-year government bond rate move significantly higher. We actually have a chart on the 10-year. We can show that. And as you see on the right-hand side, it briefly touched 4.5%, all the way from 4%. So normally you think when times are tough and there's uncertainty and a bit of chaos out there, bond yields will drop because people or businesses or countries will flock to the US bonds, which is the safest bond, the safest currency, the world's alternative currency, the world's currency for those to feel safe owning US dollars, owning US treasuries. Well, when bond prices spike, that means the opposite. Instead of buying bonds, driving up the price and down the yields, people were selling bonds or just not buying bonds at all. And that was the fear. The fear is that countries around the world, Japan, China, etc., who own a lot of US treasuries, perhaps they'll start selling those bonds out of anger or basically to get back at the US for their tariffs. Who knows what could happen? And so when that was seen by the current administration, Treasury Secretary Bessent, President Trump, he had to do something. And that is actually when President Trump put that 90-day pause on tariffs because he saw the bond market speaking and he didn't like what the bond market was saying. At the same time, JPMorgan CEO, who President Trump respects quite a bit, turned and said that a recession is now the base case for the United States, not the perhaps or probable. It was the base case, meaning it was pricing in close to 100% recession based on what the president and his administration was doing. So keep an eye on bond yields. If these were to spike higher, then that is not a good thing. We also have the 2-year Treasury bond, which we can put up. Now, this one also went a little bit higher, not as much. This one can be controlled a little bit more by the Fed and their interest rate policy. But longer term bonds, that's the tougher one. And we know, for example, mortgage rates usually play off of the 10-year and the longer term bond rates. They get mortgage rates from the longer term government treasury. So keep an eye on bonds. If they start to surge, that is not a good thing for the stock market, and you could see some more reaction out of President Trump. Our third point and our last point, corporate earnings. And we've had a great start to the corporate earnings season. The problem with that is that corporate earnings are from Jan 1 to the end of March. Well, the reciprocal tariffs and many of the tariffs were not put on or placed until April 2nd. So a lot of companies, at least so far, have said great earnings, but we're just not sure going forward. We actually had the United Airlines CEO give us 2 scenarios. One, if a recession happens, how much they believe they will make, how good they will do, so an outlook. And if a recession doesn't happen, we don't really see that often, where a CEO actually takes 2 scenarios, recession or not a recession, and gives us his outlook based on that. So I thought that was kind of interesting. But we did get the banks reporting earnings, the big banks out of the US. What we saw from a lot of them, and we can put up our first big bank, Bank of America, I believe, is our first chart. You can see how the Bank of America has fared lately, not so great, but has just started to move higher. Them, along with JPMorgan, and which is our next chart, and all the other big banks out of the US, they came out and said that things have been pretty good. None of them took down their guidance for their full year. And in fact, JPMorgan increased their guidance for full year. JPMorgan took down, or actually raised, I should say, their allowance for bad debt. So perhaps planning for a worst case scenario. But all the banks, including Goldman Sachs, Morgan Stanley, said that trading was their biggest positive. Net interest margins were good as well. So the banks have or reported pretty good earnings. We have a couple of more banks to show you here. Wells Fargo, another of the major banks. Also, you can see the chart. It looks very similar to the other bank charts. And last but not least, we have Citigroup. Again, very similar. We see the Citigroup stock coming down and then rallying most recently. So overall, I think right now it is a very difficult environment for individual investors. You have to focus on a lot of things. Tariffs obviously is the number one talk of the town, and their effects and everything that's coming out of the President Trump administration. But you also have to look at bond yields. I think you want to look at corporate earnings. So far, so good on that side. So take all that into consideration before you make your investment decisions. You want to do this as best you can. Obviously, it's difficult at times because there is no look ahead or future predictions. All those are pretty cloudy right now. And because of that, it's starting to make investment decisions a little bit more difficult to make.